just analysing what happens after price takes out a buy side liquidity and displaces with 240, 4-hour time frame, fair value gaps, order flow, displacement, whatever you want to call it, all the same thing almost. So current order flow going into the week was bullish. Price, Monday opens, takes out liquidity above this buy side and this buy side, which also happens to be an equal high right below this fair value gap or imbalance that started this year. So from the 1st of Jan, price has been tanking or slowly dropping, and then has come back to that level again. So a key level, price comes to that level, and then we get this kind of price action, no fair value gap on the 1-hour time frame, but we do get it close below this eventually, right, on Tuesday, 6 a.m, 7 a.m. So price starts to displace. So we have that. So yeah, Tuesday price displaces. This is the weekly low already set on Monday. Displaces, we have a bearish fair value gap right here on the 4-hour time frame, which after taking out liquidity, we've identified the next drawn liquidity. Bearish. This is the drawn liquidity. If price is to hold, then we have a fair value gap that price can tap into and continue lower. Price comes into that level to take that liquidity above that high, it does, and then it starts to consolidate, starts to find some bearish momentum. This is Tuesday, so especially this time, take our liquidity up there, highs 349. Yep, so it just tapped into this high, forming an equal high, and then price drops. Where does it drop down to? You're expecting price to come down to at least this level, right? But I would be careful because we also have this gap as support. So price displaces bearish fair value gap, and then furthermore more bearish imbalance that is held, and then price comes back down and tests this this gap and fails to make a new low, and then starts to push higher, because this imbalance starts on the Tuesday after liquidity grab on Monday. Drawn liquidity is here. Is it going to reach that straight away, especially when there's no news the whole week? I don't think so. So it comes back up, takes liquidity off that, tries to push lower. Ideally, you want to see price come into this 50 level mark, which it does now, which also happens to be at this 60-minute fair value gap, and then price starts to displace on the, let's see, it comes to the 50% mark, right? There's no imbalance formed at this time for entry on the 5-minute. However, comes up, we got this imbalance to start off with. That's the first one. I need more confirmation. Then we take out the highs, then pull back, then we take out another highs, essentially a head and shoulder pattern, right? And then we form an imbalance after the third, after the right shoulder, that's held. Then we form another imbalance right here, and this is a good location to go short, especially we have this 50% off that 240 FVG and down to the Asian low. Cool. Another thing, what makes it even better is that this becomes a daily time frame fair value gap, so the drawn liquidity is even clearer, and price coming into this 50% mark and displacing with. So if you need further confirmation, this is your further confirmation. We displaced with a bearish fair value gap, and you can just short it right around this area, stops at the highs, target either here or down to these lows. Even better, we get an order block, and then during the news price tanks, and then we see it just starts to move sideways. That's one play. This is different to the displacement we get after clearing out the 240 fair value gap on the pound dollar, which I discuss later on. So yeah, on the pound dollar, because of the fact that we held weekly low, which was our drawn liquidity at this daily time frame fair value gap, and price displaced. Look how strongly price displaced from this low, with strong imbalance right there, right? A massive fair value gap on the 240 time frame, and then it's come into this imbalance, the bearish fair value gap. And on the 1 hour time frame, because of that, I wasn't looking to short for too long. My targets would be at the start of this level or at the start of this 1 hour fair value gap. So we get displacement, and we also get a fair value gap right here. So on the euro dollar, I would have gone short right here down to a drawn liquidity. However, because the drawn liquidity here for me is this imbalance right here, because of the fact we've rejected these lows and displaced strongly all the way up here, I don't expect price to come all the way back down and clearing this entire fair value gap. Not yet anyway. So the initial target would have been here, and that's already reached, so I wouldn't go further short. But more on this later on. Something similar happened on GU on after Tuesday. So price has been dropping lower after taking out these highs, holding this imbalance, and has come into a daily time frame fair value gap. So ideally, price can find support here and push up. However, we've been in a bearish order flow, and on the lower time frame, we can see further bearish order flow maintaining right here, right, and followed by the three. This is another one here, and we also have one right here above this order block. So the euro dollar one only had one fair value gap, and it came to the 50% mark, whereas this one has two, right? Two fair value gaps on 240, so very strong. What does price do here? Taps this daily time frame fair value gap, and then comes up and taps into this level. Is it going to come to the 50% mark? Maybe not, because of the fact that there's two daily time frame fair value gaps rather than just one, like we saw in the euro dollar. And then what happens here Wednesday during New York session? This is 145. Yep, we get this straight move up, imbalances along the way. Price closes below that imbalance, the first one, and then we also get a market structure shift right here too. You see, after this is a market structure shift for me. Or you could also wait if you wanted price to close below this, and then you have this, and also you have further market structure shift, and you could short it there down to, I would go to these lows and put stops above this high, or even Asian low. There you go. Also, we had this fair value gap here too, which held and then tanked, and then it's been holding, and then there we go, we have this price tanks all the way down to the weekly low eventually. So yeah, similar setups, 240 fair value gaps, one with only one. In euro dollar, we only have one fair value gap in a bearish order flow. If you look at it, this fair value gap is different to this one. On this one, we have red candles on both sides with one fair value gap in the middle, whereas this one, both sides green, and also it takes out liquidity, or the drawn liquidity that my target was. So ideally I wouldn't want to trade this fair value gap, because it's not really, I expect price to continue higher up from, well, I don't really know what price will do after taking out this liquidity. Whereas this one, clearly a clear drawn liquidity followed by a clear fair value gap with red candles on either side. Whereas pound dollar, similar, there's no buy side sell side liquidity here, it's just at a daily time for fair value gap, comes down with red candles on either sides. First one is minor fair value gap, especially when it has a green candle at the end. And for that reason, I expect price to tap into the other one, the second one, which it does, and then provides an entry during New York session on Wednesday, and then comes down to the drawn liquidity, the sell side liquidity right here. So yeah, that's something to note. Cool. This is another fair value gap play from the week on pound dollar. So after rejecting this second fair value gap in a bearish order flow, we get a fairly strong bearish displacement, and if our draw on liquidity is going to be at this level, then there's potential opportunities to trade on a pullback into this level and then back down to here. Only problem for me is because we are on the daily time frame, we are at a daily time frame fair value gap. It raises questions. So yeah, you see what I mean. We are deep in discount, and we held this fair value gap both in inside bar the next day. So here we have it. On Wednesday night we closed like this, and then this is on Thursday morning at 5 AM. It's like this. So we are at the 50% mark. Are we going to look for trading opportunities on the 5-minute time frame? We have a bearish fair value gap, and let's see, are we going to get another bearish fair value gap? We've got a market structure shift, we've got a fair value gap here. We also, on the 15-minute, have got a close below this. And so, are we going to trade on that level at 640? Tell me. Drawn liquidity is down there. Nope, price pushes up. So what's next? 7:30, and then 15-minute. There we go. We are holding that level on the 1 hour time frame. We strong close above this fair value gap as well, and then a strong bearish candle followed by another bearish candle, which on the 4 hour holds essentially a turtle soup. On the 15-minute, we have this, a strong market structure shift. After price takes out the highs of that 240 fair value gap, and then with displacement, then price pulls back, closes above that fair value gap with a strong, bullish momentum. However, this is the exact time you want to look for short. So we close below this, turning that into an inverse fair value gap, and then entry can be somewhere along these lines. We tap into it, and then we drop. That's another play of 240 fair value gap on the pound dollar. So yeah, why is it that on the euro dollar, when there was a free candle pattern, it came into the 50% mark and then dropped, whereas on pound dollar it was a free candle pattern with a fair value gap and cleared the entire imbalance, the fair value gap? That's a good question. Here we came in, tapped a few times, a couple of liquidity zones created before the 50% test, whereas this one doesn't really have that. Plus this one, it bounced off this gap, open gap. This one, it came and closed below this daily time frame fair value gap, so maybe it's the Tuesday's low taken out. Here, yeah, no lows were taken out. So yeah, it's a good question. Also, you can see one interesting thing right here is that we've got bearish order flow, on higher time frames, and 240 price taps into this 240 fair value gap, and then price clears this first level of fair value gap on the 240 and then taps into the second one, displaces more fair value gap. This fair value gap gets completely filled, and after it gets filled, price pushes down from internal range liquidity and takes out the weekly low, which is a drawn liquidity at this daily time for fair value gap as well. So which is interesting, because straight after that, because there's nowhere for the price to go on the 240 time frame, it jumps all the way back up to the next internal range liquidity. Because now, after taking out this liquidity, there's nowhere for the price to go in this zone. It comes all the way back up and clears this fair value gap. Is there something to note? And on Friday, price pushes back up into this imbalance fair value gap after taking out the drawn liquidity for the week and also the weekly low at the daily time frame fair value gap. So is it going to hold this level at 50%, or is it going to continue higher? I don't know. Let's see. If we are going to take trades at every 50% of the 240 fair value gap, then obviously we'll have to take trades here as well. Especially once you get these imbalances, and also market structure shift. However, we've come into a fair value gap on the opposite side, so ideally it's not a good trade. Pushes up, pushes into the peak of the fair value gap and taps into it. We also close below these fair value gaps, or this fair value gap, and come into this level, and price holds so far. Here we have it, another fair value gap created on the bearish side. And then price dropped. That would be a good entry at this level. Looking at the 50-minute time frame, so we have one imbalance, we have two imbalance fair value gaps, and price did not come down to this low and take out liquidity at the moment. So this level, especially after closing below this bullish fair value gap, is a good zone to go short. And targets at these low, I wouldn't want to go any lower. Price taps into that fair value gap and then drops into these 1 hour bullish fair value gaps. So I wouldn't want to go anything any lower than that, any lower than this, right? So yeah, that is another trade. You also have this market structure shift. So yeah, came into the peak market structure shift, break below all the bullish fair value gaps on the 50-minute, and also two fair value gaps along the way. So this is another fair value gap play on the euro dollar. So yeah, we have liquidity taken out, buy side liquidity, major level, right? We know, we've seen it already, and we have imbalance held, respected, and we have another imbalance, this fair value gap. However, we also came into the weekly low, plus weekly low, at a pretty major level, strong imbalance right there, or bullish fair value gap, and found support. Price started to pull back, and this is how we opened on Friday. So if you're looking to trade this on the 15-minute time frame then, and you're looking for imbalance at this level, no entry on your 15-minute time frame. On the 5-minute, nothing. It's a good sign, because if you look at it, this fair value gap, it's a 3-candle pattern. However, both sides are green. One side takes out liquidity, or the drawn liquidity, and then pulls back, comes into the peak of this 50-minute fair value gap, right inside this 240. Displacement followed by market structure shift. We close below this 175. Oh, we don't close below this. Okay, we came into this level and we got a pretty strong market structure shift, or bearish displacement. We don't close below this. We come and just hold that level at the moment, and then we got a close below, and then we got a close below again. That taps into these fair value gaps. I took a trade here on the pullback and took a loss. Then we see this bearish fair value gap being held, this 240 being held, this 50% off that imbalance still holding. There you go, and then displacement, and then price has gone down to the Asian low and hit that, and then it's pushed up into the peak of the fair value gap, where it is finding some resistance. It's better resistance on 5-minute price. Displacement followed by liquidity grab, followed by displacement, followed by fair value gap, and then you could have traded at this fair value gap right here. So on the 5-minute, were there any opportunities to trade in this down to the Asian low? After this 50% rejection, pulling back, liquidity grab, displacement, one displacement, pull back, then another displacement, followed also with inverse fair value gap. So this was a good location to go short, especially at this level. Stops over here, and then at Asian low. Cool. However, I still say this is a low probability trade because of the fact that the location it's in. The overall context of this makes it a low probability trade because of the fact that it's a very weak fair value gap. It took out drawn liquidity and also held a pretty strong support level. Maybe we'll push back up to this high and then find resistance at this level.